It's another edition of the Trading Tips video newsletter, teaching you how to become a successful trader today. This video newsletter is brought to you by firsthourtrading.com.
Welcome to this edition of the TradingTips.com video newsletter. In this episode, we'll be looking at a pair of recent blockbuster IPOs. Even with the market waning, there's still an appetite for new offerings. What does this mean? Well, let's find out. First, let's look at Trulia, ticker TRLA. It had its IPO on September 20th. The stock was originally priced at $16 per share, but soared to as high as $25.20 on its first day of trading and closed at $24 per share. It's remained above $20 ever since and is trading in that same $24, $25 range as of the recording of this podcast. What does Trulia do? Well, it shows prospective home buyers maps of house listings, of real estate listings. This is quite similar, of course, to the stock you might be familiar with, Zillow, ticker Z, which had its IPO last year on July 20th, 2011. Zillow debuted at a split-adjusted $35.77, and a year and 3 months later, it is trading at roughly that same price. Meanwhile, it did go as high as $46.86 on September 20, 2012, which you might remember was the day of Trulia's IPO. Since then, Zillow has pulled back by around 20%. In that same time, Trulia has posted small gains. There's little doubt that Zillow is the superior of the two companies, at least right now. In August, Trulia had 13.1 million unique US visitors, not counting mobile traffic. Zillow had 24.1 million unique visitors, including roughly 8 million visitors through its exclusive relationship with Yahoo. Trulia posted a $6 million loss last year, while Zillow notched a $1.1 million profit. Only in terms of price to sales ratio is Trulia looking better than Zillow. But in terms of price to cash flow, and especially price to book, Zillow wins out. Trulia made quite a splash with its IPO, which was well timed with the coincidence of the Fed's announcement of QE3. As we all know by now, the Fed's program of systematic inflation is what gave us the housing market boom and the subsequent bust. Regardless of the ultimate consequences, though, QE3 sparked confidence and Trulia was the beneficiary. Money flowed into Zillow too, as it hit its 52-week high that same day, but as the stock isn't as shiny and new, it has since sold off. Trulia looks overbought here, and if anything, Zillow should be the stock given some consideration. Its numbers are better, and its valuation is too. Now let's move on to another recent IPO, Chewy's Holdings, ticker CHUY. Chewy's owns and operates full-service, not fast food, Mexican and Tex-Mex restaurants. Now, you might think that this is quite a departure from a housing market stock, but the reality is that the money supply expansion, as the Fed is now doing again with QE3, leads to increased consumer spending, which is bullish for the housing market and for casual dining, which is an area where consumers cut back when money is tight. Thus, it's really no surprise that Chewy's also had a blowout IPO. Chewy's holdings currently include 37 restaurants in 8 states. 2/3 of Chewy's stores are in Texas, where the company was founded in 1982. Its first store outside of Texas was opened in 2007, and now there's plans to expand in the Midwest and the South. Chewy's IPO was on July 24, with the stock debuting at $13 and closing at $15.06 the first day. Recently, the stock was trading at $28, up more than 115% from its IPO price. Chewy's is the only full-service Mexican restaurant chain trading on a major exchange. Past plays in this market included Mexican Grill and Cantina, Chevy's Fresh Mex, and Rio Bravo. Each of these were acquired by a larger corporation, leading to a big payday for existing shareholders. That's great, but the problem is that 2 of them were eventually sold off, and while the other failed and is now out of business. This track record may discourage potential takeover bids for Chewy's, and that may keep share prices down. So where did these other Mexican and Tex-Mex chains go wrong? Analyst Andy Barish of Jefferies & Company says that they didn't stick to their core competencies. The chains got big enough for the IPOs on the basis of quality food and an entertaining atmosphere, but when they tried to expand beyond that, they cheapened their ingredients in the name of mass production and lost a lot of their character. Chewy recognizes this too, and its CEO vows to not go down this same road. Thus, with everyone on the same page, including potential acquirers, Chewy remains an attractive potential takeover. An example of a Mexican chain that didn't lower its standards in the name of expansion is Chipotle Mexican Grill, and it has been a great play, even in spite of its recent pullback at the beginning of the summer. Chipotle isn't in the same market as Chewy's is a full-service company with sit-down restaurants and an average plate of about $13. It's not a fast food chain like Chipotle, but Chewy's hopes to do in the casual dining market what Chipotle was able to do in the quick service or fast food market. Last quarter, Chewy's grew EPS by 175% compared to the same quarter last year, and estimates for the current quarter, the results of which will be announced on October 28, were revised higher to plus 140% compared to the same quarter last year. I like the stock as a momentum play, preferably at under $30 per share, but if the stock is showing strength, I wouldn't mind paying more than that. I'll set my first price target at plus 8% and use a rolling stop loss of negative 8% once that target is hit. I'll sell half my position once I hit my first target and let the other half run until I cash out with my rolling stop. Cut your losses short and let your winners run. This is the game plan for success. We hope you've enjoyed this TradingTips.com video newsletter. Thanks for watching and good trading.
This Trading Tips video newsletter has been brought to you by Manny Bacchus's First Hour Trading System. Every day there's money to be made in the first hour of stock trading. This is the world of day trading, not for novices, unless you have a system. The First Hour Trading System. Visit firsthourtrading.com now and sign up for a free 30-day trial. You could make enough in the first hour of your day to take the rest of the day off. View more Trading Tips videos. Visit tradingtips.com. Sign up for our free video newsletters and become a successful trader today.